Welcome to the Business Trendsetter Podcast, where we talk about trends and how to use them to run your business. My name is Manny Turan.
And I'm Adam Harton.
We're Spark Partners. We're here every week discussing all things trends. We're helping you to develop your own sensors in order to understand trends and then ultimately use them in your business by making these decisions. And it's interesting that Adam and I just so happen to be both engineers. Of course, Adam's an electrical engineer. I'm a mechanical engineer. But one of the things that we have some understanding of is the idea of a sensor, being able to identify things, listening to things, all that. And today's topic has to do with the idea of a weak signal. And we're not talking about a weak signal in the electronic sense. We're talking about a weak signal in being able to identify trends very early. Now, there's some very strong implications of that can have give you monumental success down the road. But you've got to be able to listen to these weak signals because they then become strong signals. And when those strong signals exist, then they basically push out the incumbent signal. And so we're going to decode all this. This is all, of course, a metaphor, but let's start off with the idea of this weak signal, Adam. And what are some weak signals that we've identified recently that can maybe be strong signals down the road?
Well, certainly, I think the podcast we did recently around electricity. Everybody's thought their whole lives of electricity is a fairly expensive commodity. When I was a boy in Oklahoma, people actually put natural gas-powered air conditioners in because electricity was so much more expensive than natural gas. And natural gas was considered basically free in those days, right? But for years, we thought of electricity as being this expensive commodity that you paid for by the kilowatt hour. And as we discussed, that what's happening is with the rise of sustainables, which have no cost in terms of fuel costs at all, right? What we're seeing is an increase in capacity that has no fuel costs, and with machinery that doesn't cost that much, like nuclear power plants are crazy expensive. So you're going to get more electricity with less money down and less cost per kilowatt hour of creation. So what's that mean? If you look down the road, that's right now you'd say, what's the big deal? Sustainables are less than 15% of the total market, I think, in terms of production. And I got to get an electric bill every month. That's going to happen. Well, what do we forecast? The weak signal indicates how this is going to change. And that means the price of electricity is going to relatively fall against fossil fuels and other sources of energy. And you can start planning for it today. That's, I think, one of the better examples of taking a weak signal and applying it as a trend.
I agree. I think these it really takes a lot of confidence in order to really understand these weak signals and how you can use them. I mean, if you think about renewables 20 years ago, there were a minuscule amount of the percentage of our power use. And now, like you said, they're getting higher and higher, and there'll be a time when they'll be probably 50-50. And then there'll be a time when they actually rise above that mark. And we've talked about the idea of, I think it was probably last year, of that tipping point, right? And it's not 50%, it's way before that.
Right. No, you're absolutely correct. Because a great memory you have there. Yes, those tipping points occur much closer, like 10-15% of the market, not 50% of the market, which is what a lot of people think. And therefore, they're slow to react to a trend. They're slow to take advantage of it. I'll give you another example. Right now in environmentalism, okay? So that the ESM, the movement towards environmental sustainability, governance, good governance around environmentalism, that was a really big deal 2-3 years ago. People heard a lot about it. I kind of sat there and listened. But then what happened was big money got on the other side. And that big money went to Exxon and places, and they're saying, hey, look, we're not going to track our fossil footprint anymore. We're not going to do that. We're going to oppose any legislation. State of Texas even went so far as to say that any company that had an ESG policy that favored ESG principles and would not be, that the state of Texas pension funds would not be allowed to invest in those companies because they didn't want them ignoring fossil fuels. They wanted to protect the fossil fuel industry. So what happens is people start saying, well, wait a minute, it sounds to me like that was a fad, like only for a short period of time would people care. Well, you got to pay attention to the weak signals because, yes, there was a strong backlash. That backlash is actually not that many people, and it's big money in a handful of places. If you look at it overall, movement and policies and regulations towards better environmentalism are everywhere, and they're happening every day. We just saw, again, in the electricity marketplace, we've seen all the regs change very recently to allow for much quicker implementation of sustainable energy production. So we're seeing that people are, the marketplace it's still not there in terms of, oh, environmentalism comes first. People still argue about whether there's climate change. But the reality is that signal is indicating to us that every year it's getting stronger and nothing seems to be able to get in its way. And now, even though we've got a backlash and big money attacking it, those are actually the outlier stories. Those are
Right.
the man bites dog stories, so they get a lot of headlines, but they're not the norm. They're not the growing signal.
Yeah, what's interesting, and I don't know if you follow any Mexican politics, maybe you don't, but there was an election last weekend where there was actually two women, I should say, two women candidates, and the one that emerged as the victorious one, Claudia Sheinbaum. Her, she's actually a climate scientist. She's extremely left leaning. So and of course their politics are, they swing both directions just like ours do. But it's going to be interesting to see what happens in Mexico in the next 6 years, because now you've got a climate scientist PhD up there at the top seat with now the power to make a lot of policy. So we're going to see what happens in the next 6 years there in Mexico. But I mean, that's one example of a kind of a crucible to look at in the next 6 years to see how that weak signal becomes stronger and stronger.
And in fact, you're making a good point because a lot of people in America would say, I don't care. I don't pay attention to Mexico. We get very egocentric in the United States, not paying attention to Canadian politics, Mexican politics, and often there's a lot of bashing of European politics, like that somehow their politics are bad, we should ignore them. But here in this case, as you pointed out, now Mexico is probably joining the ranks of Canada and Europe in terms of increasing the requirements and regulations around environmentalism. Because, yeah, she's not only a PhD, she got it at Berkeley. So, I mean, she has great credentials when it
Yeah.
comes to
And so
environmentalism.
to lean on what you said is, if you're a business owner in the US and you're thinking, I don't care about Mexican politics. Well, guess what? If you're in the metals business or you're doing anodizing or some other, you've got a product that's got sheet metal that needs to be treated or has some other process in place. A lot of companies now go to Mexico to do this because the environmental concerns or the EPA is different down there. So they're more lax. Well, guess what? Now you've got an environmental czar at the top seat that could maybe start to squash some of those loose controls. Guess what? Now you've got to do things at a more expensive rate that then affects your top line and your bottom line. And there it is. There's why you should care.
I mean, everybody in America should know that for 40 years, we've exported our dirty laundry. I mean, quite literally, we've taken our trash and exported it to foreign countries, and we've exported dirty jobs. So you're right. Metal working, there's a lot of places where there's contaminants that are hard to work with, hard to preserve, hard to keep out of the water supply, that kind of thing. And we just said, okay, fine, let's do it in Mexico, right? Run that job down there, or run it to China. Now, things in China are going sideways. For the first time in a long time, exports are bigger than imports with China. And so we're really shutting down the tap quite a bit in terms of sending those things to China. And where are we sending them? To Mexico.
Yeah,
That
exactly.
And
yeah, I mean, you'd be surprised.
Dial up.
Exactly. You'd be surprised. So, of course, Arizona, we have a very rich ranching background, right? I've got family members. We've got a lot of friends that are in the ranching world. And if you imagine, guess how many slaughterhouses there are, I should say, how many processing plants, commercial grade, large grade, there are in Arizona.
Gee, I know Colorado has a lot. I don't know. I would think with the heat and the environment you have that it would be a tough place to fatten those animals up. So I wouldn't have thought it's a great place. Tell me more.
Zero.
Okay.
So a number of years ago, there was a plant in Phoenix, a large commercial processing plant, where they slaughter the cow and then they go through and they separate all into halves and all that, and so they actually now ship them all down to Mexico.
Yeah,
they ship the live animal down to Mexico, and then it comes back as like sides of beef, and then they ship them to Safeway, and then Safeway they have butchers that go in and give you your top sirloin and your filet mignon and all that. But I was surprised to know that, because I mean, there's a few here and there that'll do it at custom size, but not industrial grade. There used to be one large one in Phoenix. Now there's zero. Weak signal turned into strong signal.
and I think part of what we want listeners to understand is you can pick up these weak signals And then the thing to look at is where's the money going? And start to track it. Try to see where the investments are being made. Like I said, if you took a look at environmentalism, you would see that big investments are being made around the world, actually. China is even consuming a lot less coal than it used to consume 4 years ago. So we're seeing that there are big investments being made in more environmentally friendly methods of getting things done, processes. And what that tells you is it's going to accelerate. So what is important to understand about trends is that every year we're spending all this money in the world, right? And what happens is it shifts. And the trend happens when we de-emphasize or de-invest in one thing in order to invest more in something else. So, for years we've produced mechanical adding machines, and some of you may be old enough to remember slide rules, which was a mechanical device that looked like a ruler, and you used it to do your calculations with. Well, as soon as the electronic calculator was created, and the very first ones were literally addition and subtraction, and then the 1960s, like 60s, these things cost $300 or $400. So they're very, very expensive. What occurred was people saw this as a better technology, and nobody put any money into investing in mechanical devices like that anymore. I mean,
Right.
tools for engineers, we're now going to electronics, and it all got electrified. So what you do is you see, okay, here's something. What's happening? Oh, gee, I'm seeing engineers are paying $500 for this device because it's going to be greater level of accuracy. And it helps me get my job done more quickly, even though it's expensive. Well, that's your bleeding edge. That's, again, weak signal. But watch that money flow. And then what you see is, again, now nobody makes a slide rule anymore because everybody uses other devices. Take a look at mobile devices.
Right.
We went through 25 years of desktop computers, right? And you had Dell and you had HP, and people making bigger, better, more powerful desktop computers. But then when we shifted to mobile devices, at the beginning, it was just the iPhone and other phones. Then we got the iPad. As mobile devices came along and laptops kept getting better and better and better, nobody invests in desktop anymore, right? And
Yeah.
so the money starts to flow heavily, and when it flows in one direction, it de-invests in the other. And that's why it accelerates. The adoption rates accelerate. That's why the adoption tipping point is at 50%. It's much smaller. It's because this acceleration of the marketplace happens as the investment rate changes. Computer applications. People have been now developing internet applications. Nobody's trying to develop a new application for a laptop or a desktop, right? I mean, that's not where we are. I mean, some of the
Yep.
AI stuff is happening there, but most people are saying, "Oh, I'll use it whenever it's on my iPhone or when it's on another mobile device."
Yeah. I mean, I would agree with you. There's one small maybe exception in that the gaming world are still, a lot of them are still using desktops. And some of the rise of NVIDIA was because of that. So you're going to see some interesting things happen in that domain because of that.
Let me back off that because I agree with you, but I also think the difference is that it's not the PC of my generation. Right.
Right.
My generation's PC was spreadsheets, Word documents, that kind of thing. These gaming machines are so much more powerful. And one of the things is that the early machines we had with the complex and instruction set computing, the old 8080 and all of its successors that came after that, when we started adding the ability to have floating point operations and much, much better graphics. Then the PC, as I knew it, became a whole different thing, right? And so I think that I almost can't call it a PC. When I see these things, I'm kind of like, it's so much more than a PC, these gaming
Yeah.
boxes.
It's like a gaming engine or something, you know?
Yeah, yeah. And of course, that ushered in AI, which we'll get to in a minute, right? Another good example of this was for years, the electric power industry focused on how to make better nuclear power plants. The old joke was that we never built two of the same nuclear power plants in the United States. It really wasn't a good joke. It was sort of a irony joke because it kept the cost really, really high. And like in France, they had a lot more nuclear, but they were all the same thing. They did them the same over and over again. The net of it is we kept investing in nuclear power for 35, 40 years. That's not happening anymore. To the extent anybody's looking at trying to bring nuclear technology back, it's using the technology that existed for a while and making it more cost effective and safer. So we don't see any investment really happening in making better nuclear power plants unless we can get to nuclear fission, which is still pretty far off in the future. Where it's going now is going into sustainables, right? So when the movement shifts, the people that are going to make electricity, they start shifting. So we're making turbines that can go into windmills, turbines that can drive hydropower. That's where it's going. Not trying to figure out the nuclear plants. So again, what I'm coming back to is cars. Where's the money in cars today? Everybody's pouring all their money into EVs and charging stations. You don't see people trying to make a more powerful internal combustion engine vehicle. That doesn't mean that the marketplace isn't consuming them, but it does mean that as every year that goes by, the EVs are going to get better and better and better, whereas the ICE cars probably are going to get a lot better. They've probably peaked. And now there will always be a market for the internal combustion engine vehicle, um, but it'll shrink. It's going to get much, much smaller as time goes along because the investment in the newer technology is going to improve it, while the technology that we have for internal combustion engine vehicles is pretty stagnant now. So that's where we start to say that's how you can predict where the trend is going to head. You start saying, okay, the money has de-emphasized the old, it's emphasizing the new. And so I started seeing that about 6 years ago. So for a long time, Tesla was a great investment, quite simply because they were the only ones doing electric
Yep.
cars. They were founded, I tried to look it up again today. They were founded in 2003 and they launched the Roadster in 2008. And they pretty much had the market to themselves for 10 and 15 years, right?
Right.
There's no competition. So what we saw was here's a company that's given the opportunity to go develop a new market. So Tesla was a classic weak signal. You could sit there and discount it. The whole American auto industry discounted it. But what I would notice was that they sold every single car they made. And so it was clear there was a market that was developing there and it was going to grow. And of course, the cars got better and better. The initial cars, two-passenger car, had a range of like 60 miles or something, right? They kept improving all the aspects of the car and the ability to have charging stations. And so the marketplace developed. So by looking at the investment rates, now we've got a huge investment rate coming into that market where the federal government passed legislation to install these new charging stations and to invest in better battery technology and all that good stuff. So you sit there and say, it's a fait accompli. The market's not going to go backwards, it's going to go forwards.
No.
As a result, it's pretty easy to predict that the EV market's going to be bigger.
Yeah, I think that the auto industry, I mean, I lived in Detroit for a while, and the auto industry was, and actually, even to some degree, still is very much against it. I mean, we talked about Ford many times. We've talked about, that whole thing. We've talked about BYD and their ability to sort of not come to the U.S. because of all the lobbying and all the trade war. But I think there's going to come a time when there's going to be an overwhelming demand for these low cost EVs. And we've talked about Tesla. They made some bad moves recently, in our opinion. So it's going to be interesting to see in the next 4, 5, 10 years what happens to the auto industry. And I mean, I'm a car guy at all sorts. I know you're a car guy, but it's going to be interesting to see how they react, and especially government mandates. Of course, if Trump comes into power, if not, it might change. And so these are all things that you need to be aware of as you start to make decisions for your business.
So as small business people, what we want to keep in mind is we're not in this to be stock pickers, which is one of the things I get put on point for a lot of times. Who should I invest in? But Tesla is a good example of this. When I first was a fan of Tesla and I wrote about it in Forbes magazine, like I said, it was because I saw these weak signals that were emerging where people really, really liked the car. And when they first got the Model S in 2012, I think it came out, people loved it. That bought a Model S loved the car. It was very, very fast compared to an internal combustion engine car. There were other factors they liked about it. It got rated very, very high by Car Driver magazine. It was named the #1 car of the year of all cars, not electric cars, all cars. But the problem was it was still a weak signal because there was one game in town. But if you notice, about 3 years ago was when we started really telling people you got to pay attention to this. You need to be thinking about it if you're buying trucks. You need to think about it if you're going to have a fleet of any kind. Because what happened was start seeing enormous amounts of money flood in, not just from the government, but BMW, Mercedes, as you said, BYD, even General Motors, Chevrolet, and Ford split in two, where they had Ford Blue and Ford Electric, so that they could go develop the Lightning and the Mustang, the E-Mach Mustang, right? So what we saw was that big investment hit. Now what we saw was de-investment by the major players in internal combustion, increased investment in the electrics. And that's when you can say, as a business person, okay, this is definitely not a fad. This has reached the tipping point, and I need to prepare for this in the future. I need to anticipate that I'm going to have an electric fleet. And, if I get there quicker than other people, I might do better than other people. And anticipate better costs related to the electric fleet because of better performance of those vehicles and lower cost electricity in comparison to fossil fuels. So we can bring those things together now into scenarios and saying it's time to build those scenarios. And you may not make that transition in 2024, but you can start saying, I'm pretty sure I'm going to have to be there by 27. And now, like, how am I going to plan that out? How would I make that happen? How would I start to sell off some of my vehicles? How would I start to add in this new fleet? And also looking at the people that I'm using for my deliveries, people that I'm using in my supply chain, looking at what they're doing, because if they're not transitioning, then their costs are going to go up relative to the competitor. And it gives you some insight as to whether you should be changing some of your suppliers or changing some of the providers that help you get to the end customer.
Yeah, I think, we had our pre-meeting, Adam, and I discussed the idea of, okay, you have a business and you're beginning to develop your acumen and identifying trends to see what you're going to do for your own business, what product or service you're going to sell directly, which is very strong. And that's a great thing to do. But another thing that's very powerful is looking at what tools are available to enable that development of that product or service, right? And in that tool sector, those can be also trends. And so, for instance, NVIDIA, we've talked about how the power of the AI space has been, accelerating. And how can you use AI in order to grow your business to develop other tools and other products?
Yeah. Well, okay. Let's use a historical example on this. So Apple brought out the Apple One in 2003, and it brought out the Apple II in 2004. And those products really had their greatest success in education. With the educational market picked up their applications, and they were used by teachers. Then the Mac was finally launched, I get the date here, in 1984. All right. Well, what made Apple a really big deal was when the Mac came along, people could really get into using spreadsheets, right? And spreadsheets, electronics, we always had spreadsheets. I used to keep the pads around that had the columns. I had this one that was probably 30 inches wide by 20 inches tall so that you could make these really big spreadsheets, but it was still limited. 30 inches wide, I probably had 26 columns wide was all I could get on that spreadsheet. But when in finance, you used them in supply chain management, purchasing. We used these worksheets that came in tablets. Well, now if I could do it electronically, oh my gosh, I could have as big a worksheet as I wanted. Also, it would do all these calculations for me. I didn't have to do them by hand to get to my cells where I wanted to have them. It didn't make the mistakes that I would make if I pulled something from the wrong line where I'm trying to do this mechanically or with my calculator. And so that's when the Mac really exploded, right? It started to sell like crazy. So that's that underlying. What makes it happen? What's the trigger that really gets it to take off, that gets it to be very successful? And when you see those sorts of underlying uses, that makes a big deal. And so I think, as you pointed out, what we had was NVIDIA was very successful in the gaming business. I think they were the number one producer of chips in that marketplace. And that was a good marketplace, and it was a high growth marketplace. And when did you tell me I'm trying to remember now, you pointed out that the first AI chip was.
Yeah, so NVIDIA was started in 93, and then in 99 they developed the GPU, which was the basically processing unit. And then by 2012 is when they developed they say they sparked the era of the modern AI by powering the AlexNet neural network. So that's when they claim they began the AI sort of development in
So that's
2012.
2012. And then our audience should be sitting here like, well, why is AI such a big thing now? And let's go back, ChatGPT, right? OpenAI was working with artificial intelligence, figuring all kinds of things. But when they got something that everyone can understand, which was ChatGPT, this is super easy to understand. Ask it a question, almost like Google, and you get an answer, right? Even though they were telling us the answer might be wrong. Don't trust it, right? We were still like, hey, this is a quick way to get a first draft of a paper done. This is a quick way to get a first draft of a manual done. People saw real world applications for this. And then, of course, right after that comes the imaging part where the AI can actually create pictures and images and drawings for you. Now, all of a sudden, people started saying, oh my, I could now start to visualize. So what we see is that huge explosion starts to come around. It's still a tiny market, AI, compared to where it's going to be in 5 years. So you could still say that it was out there, it was a weak signal, but it doesn't feel like a weak signal right now. Now, there will be backlash. There's going to be regulation that's going to come into the market. Just today, some former employees of ChatGPT, OpenAI, said that ChatGPT was actually a very dangerous product. So it's like the environmentalism issue we talked about earlier. There will be flare backs, there will be boomerangs, right? That'll come back on it. But the reality is, you have to look at how much money is going into it, right? And when you see so much money going into it, you know that that's just trend where it's headed.
You got to
People have,
follow the money.
yeah, people can see it's going to be productive. They see the productive opportunity. So we'll look back and we'll say that launching Chat GPT did for AI business what the work the spreadsheets did for the computer business, the personal computer business. Now, again, let's take a look at this. And as scenario builders, there's a piece of this which is around the competition. When uh, when Amazon was formed and started into business, Bezos had this idea to sell everything on the internet, and anybody could do that. But the reality was, traditional retailers completely ignored the marketplace. And for many years, he was out there with Amazon, plugging away, getting people to buy books, getting people to buy other products, but really plugging away to build a supply chain to get people to put products, giving products that he could sell. It was a slog, right? Because he was the only game in town,
Yep.
and he used a lot of money. Like, he was raising money over and over and over. Every single year, he was raising money and not making any money. It's not profitable. So he's slogging away trying to get this thing to go. So that's when people were really kind of like, I don't know if I should invest in this, not invest in this. But he was given a very, very long runway because the traditional competitors didn't get in the market. So one of the things we look at in scenario planning is, how resistant are the players to getting in? If they're pretty resistant, then the early pioneer is going to have a long runway to try to figure this out and make it work. So that allowed Amazon to become the Amazon winner today. They had a lot of time to get there. By the time the industry started to really react, they were so far out in front of electronic commerce that it's going to, I don't know what's going to ever knock them off that pinnacle, other than perhaps, some kind of antitrust action could happen against them. But if we take a look at NVIDIA and the situation NVIDIA is in, it's very different. That's going to be a very short runway because of what we just said. Not only NVIDIA right now is 70 to 90% of the market. They're printing money. They're doing incredibly well. But we already know AMD's got products ready to come onto the market.
Yep.
Intel's sitting there investing to get products into the market. Two direct competitors looking to get products out. Microsoft is the biggest investor in OpenAI. The software side, they've said they're going to make their own chips. Google, which made their own chips so they could have their own Pixel phone. They've long been in this. They've created chips for their servers, for the Google Internet searches. They've said they're going to do their own AI chips to power the Google AI engines that are going to go into future search machines. Apple has said they're going to do it, and Amazon's already developing chips because I think they can get the right kind of chips to help us be better shoppers, help manage their supply chain. So what we're seeing here is that long runway that Amazon had to develop because they were largely ignored, the long runway that Tesla had because the traditional competitors ignored them. That NVIDIA is not going to get that. They're not going to have that long runway. Now, does that mean they're going to get swallowed up by the competition? I can't answer that. That's one of the things that, why I'm not a stock picker. That's why I don't go out and write reports about where to put your money. Instead, what I say is recognize that this means the speed of change will be greater. It won't move at the speed of change that happened with Amazon and Tesla and electronic cars. It's going to happen a lot faster, a lot more like mobile phones happened. When people first got mobile phones, very expensive. You had to have the big ones that you carried around. They were cumbersome. They didn't work very well. They were wildly expensive. Well, they got smaller and they got less expensive. And that's when we started to see adoption, right? And when that adoption started to really grow, look how, I don't even remember, that probably 30 people made mobile phones at one point, Ericsson and all kinds of folks. The reality is that marketplace, once the other people got into it, grew very, very fast. Well, now we see that happening. It's growing very fast. That's why I'm banging the drum so hard. And I think which our partners continuously bang the drum about getting people to recognize the use of AI is because there's so much money going into creating tools that you can use for your business that are based on AI that if you don't get into adoption quickly, it's going to be so easy for you to be left behind.
And I think that exact thing, Adam, that exact thing is what we offer to our listeners and our clients and our customers. Basically, that ability in order to look at your specific business. How can we look at your business and then apply what we know to then understand what trends will be guiding your business to that grand success? I mean, if you're developing products for the internal combustion engine, you're going to have a market, but it's not going to be this hyper growth market that you would want in order to really have that success that you're looking for. And I think that is when we talk about it on this podcast. Get a hold of us, Manny at sparkpartners.com, Adam at sparkpartners.com, and use us to then look at your specific business. We do this for folks all the time. How can we look at your business and how can we apply our knowledge to not only directly support you, but also teach you the mentality and the tools to develop this for yourself?
I mean, there's some good trends for Americans right now. For if you wound the clock back to the turn of the century, the late 1990s, at that point, 25 years ago, there was so much of it was offshoring was the trend, sending stuff to other countries for manufacturing, Philippines, Taiwan, Thailand, China, Vietnam. And we had that 20-year trend there. Well, now that's reversing, right? Because of geopolitical tensions, threats of war, ships getting stuck, they can't offload in the over in the Red Sea, I think it was, Houthi militia shooting at them, and all, China again being almost at a verbal offside with us while they've been partnering up with Russia. All these things have led towards people realizing, hey, we think that we're going to do more investment in the United States. That's a trend that, by the way, is very real. And that turned, there was a big trigger, and that was when all this legislation got passed in the last couple of years, in which they said, through these acts of Congress, that we're going to invest in chips manufacturing and other electronic manufacturing. We're going to invest in EVs. We're going to invest in sustainable energy. And there were big, big dollars that got put up there. So now we see the corporations reaching for those dollars, pulling those dollars in. And that means that there's going to be more business opportunities in the United States. And it's just started. I mean, we've only had that regulation there or the legislation for about a year and a half. And we're just barely getting to the regulatory side, so the money can even be handed out. But people are starting to reach in and grab that money. And so that means that the business in the next 6 years in the United States is going to be very good as more infrastructure is built, more is invested in AI. It's going to create enormous opportunities for us here, for those people that develop the solutions where people are poorly met needs.
That's it. Follow the money, follow trends, follow Spark Partners, and you'll be successful.
Thanks a lot, Manny.
Thank you, Adam. Take care. Cheers.